good reason to go, hey man, life is too short. Let's just make up and get back to work. I would go to a lot of them shows. No, not them now. Yeah. Not interested. I would jump around a little bit. Have another night like we've all had a couple
No, absolutely not. Absolutely.
Hey, welcome to the Closing Beat, everybody. Happy Thursday. How you doing? I am especially happy today. I'm always happy when the markets fall. I like that. You guys, like long-term investors, you know the market falls, that's opportunity. Everybody else is running away. The traders are doing whatever they're doing. You're an investor. It's kind of your chance, right? I mean, where do you strike? Welcome. Anyways, we're financial advisors here at Jazz Wealth. We specialize in managing our own investments here for clients. So we're a little bit more in tune with the markets than most advisors. And I know that because I'm seeing a lot of white papers and stuff going out to financial advisors about here's how you hedge for inflation. Here's how you hedge for higher rates and stuff. And it's like, I take it for granted. I'm like, what? How do they not know that? Go buy this ETF and you'll be fine. I'm like, how is this not marketing? That's weird. Anyways, I hope you check us out at jazzwealth.com. Also tonight for class, every Thursday we do a class for our clients. It's called Wine and Wealth. Tonight we're going to be going over specifically how I adjust the funds. It's occurred to me that I may have taken that for granted, how the funds are in your portfolios, the changes that I make. How do you know what's actually going on in there? So we're going to go over to the blackboard. Tonight won't be in the speakeasy. I'll draw it out, make it really simple, and then we'll go into detail for those of you that like that stuff. Also, if you are a client, go into your dojo. This is our portal where you can see all your performance and everything. We have a fin task, a couple of them there actually for you. You just click on that, give you something to take a look at for starting the new year, keeping your dough straight, all kinds of good stuff coming there for you. And I point that out, which is right over here, because I'm about to post a bit of, I don't know, like article that I wrote, I don't know, just a little something that will be a extra tax tip for you. It'd be a real good trick actually for a lot of you. That's why I wanted to post it. I'll give an exact example, make it really simple and everything. Actually, a couple examples. So yet another way, try to help you keep your dough straight there. I hope you will check it out, and we'll see you in the class later tonight. Also next week will be a shortened week for us. Thursday we'll be leaving. We're taking the company on a rough and rowdy kind of a ski trip. We're nothing fancy. We're just going up there. We're going to have to rent everything. We want to slide down the hill, maybe pull it back to the top, try it again, try not to break anything. So we'll be doing that. If you have any questions, go ahead, load us up. Ask the questions now. Let's get it done so that everybody can take a break here for just a day or two. And stock market. We're here to talk about the stock market today. That's what I want to share with you. I was so excited, right? Midday today, we were all sitting in the office, and I'm like, I hope they take this away from them. And Cody's like, what do you mean them? And I'm like, I hope that the bears come and take this rally away from the bulls here today. And that's exactly what happened there. And really, you've kind of seen this happening. This is nothing new. It's not a shock all of a sudden. It is the biggest intraday reversal that we've seen in over a year, so that's a good sign. But you got people anticipating now a half-point rate hike instead of a quarter-point rate hike in March. And so we have this assumption of higher rates coming there. Washington's only interested in spending more dollars for some reason. Nobody wants to do that, but that's what they're going to keep pushing there. It seems really weird there. Despite inflation, hey, you put some more money out there. Also, Biden yesterday had his first press conference. I didn't know that. That was his first press conference there that he had. And really, it's just a bunch of stuff. But one negative there, he said, hey, I think, how he said it? He said, I guess that Russia will invade Ukraine to some degree. And I thought, well, that's an interesting way to say that. That's obviously not good news that you want to tell people out there. You know more, presumably, than all of us. And so, that was pretty negative as well. The point being, you have a lot of this negative stuff, higher rates hitting the markets, tech stocks continue to bleed off there. So the momentum's to the downside at the moment. That does not mean that you can't have bounces in the short term. Every downtrend has a bounce in the midst of that. What it turns out to be is another part of the story. For example, you look at the Dow, right? In the midst of falling, there's lots of green days in there. There's even a multi-string move to try to recover. And maybe this turns out the same, maybe it doesn't. But the point being that one positive day does not mean the end of the downtrend. It doesn't mean the bottom is in, and makes it very difficult actually to try to decipher that. So if you look at the Dow today, that's going to make headlines because it broke the 200-day moving average quite convincingly, if we could add that. If you're looking inside of it, Let's just give a little sort here to the weakest ones. My thing is not working. There we go. You got Dow Chemicals with a sharp pullback there. Semiconductors like Intel continue to pull back. We talked about that over the last 2 days. Home Depot almost back to the 200-day. Nice pullback on Home Depot. 3M falling as well, which they're, I guess, the ones that are giving us the N95 mask. Do you remember that? When the virus first hit, like all the media was at 3M's factories, and they're like, they're cranking out these N95 masks. Don't worry, we're going to have enough. And then we just put cloth on our face, and that was fine. These poor guys probably have a surplus of these N95 masks. They probably don't even have to make any more. They've been sitting in a warehouse this whole time. Nonetheless, they're part of that there. I don't know why the stock was lower on the day, but that's one of the weaker ones in the Dow. And then Caterpillar, Walmart, the stocks that have had a good run, being the boring stocks that we talked about earlier in the year, they're just all pulling back a little bit as well. To the upside, you got Travelers Insurance hitting new highs. That's going to be earnings related. Procter & Gamble enjoying their post-earnings run. Goldman Sachs actually turned positive. It was much more positive to start the day. This one was the earnings drop that you see in there. It was just trying to recover, but fell to the markets here today, no problem. United Healthcare also was slightly positive, but inside the Dow, that's all you got. If we look at the Nasdaq, there we go. The Nasdaq, we talked about this yesterday, looking to break below the 200, I should say the Nasdaq 100, looking to break below the 200-day moving average. Did that convincingly today, too. It's also oversold in the short term, so likely you see some attempts at people trying to guess the bottoms there. Oh, there's apparently a fly somewhere. And so we talked about the effects of that. This is all tech stock related. If you look inside the NASDAQ, it's a lot of the same story, right? Peloton's going to stick out because of the news. We'll talk about that in a minute. But other than that, it's the semiconductors giving you that sign 2 days ago, the stamp, the bear stamp we called it. That's not an official name. That's just what I happen to say. And that continues to pull back your semiconductors. Micron, NXPI, AMD turning into a nice pullback there. Marvell as well. Moderna has just been really weak. I haven't followed the news on this one here, but that's been near the top of the list for the worst performers in the NASDAQ past couple of days. I'll look into that. NVIDIA pulling back more convincingly now. Lam Research, the same thing. Microchip, the one I was talking about yesterday, giving you a really healthy pullback there. And Lucid, outside of the semiconductors, is something to point out there. We do have Netflix after hours. Huh. Let's get you the Netflix here because that would be the big headline. So, didn't look into this, but Netflix trading at about 4:06. Oh, yikes. Okay. So it's going to be extremely extended tomorrow morning. I have to zoom this chart out. It's going to be all the way down here. Right, so obviously multi-year lows, 4:06 at the moment, 4:08, bouncing around there. Looks like they beat on some avenues, missed on others. Light guidance. Guidance came in light. Q1 estimates for earnings at 286, which is light. 7.9 billion. I believe they were looking for an 8 on that number for revenue. They didn't get that. Global additions for new subscribers came in really light, actually. What, 2.5? That is accurate. Okay. Otherwise, got an 8.2% profit margin there. They beat on earnings there. Global additions this quarter came in at 8.2. That's under expectations as well. I believe I looked and saw last night, 8.5. So all in all, pretty disappointing there for Netflix on the surface. That's me just looking really quick. Obviously, there's a lot more to the story that I'm not seeing yet. And that's giving you 4:08 in the morning. Extremely extended for Netflix as it goes into tomorrow, if it's stays around that price there. To the upside in the NASDAQ today, you had just news-driven names. Match.com, Marriott, slight gain, but it did give back some at the end of the day. EA Sports still in a big, sloppy, messy range there. Workday's another one, and Mondelez. Where is that? Mondelez with a slight gain on the day. Also hit new highs. We'll talk about that in a second. The Russell, really interesting. So the Russell 2000 broke down yesterday, continues to do that today, even after a morning bounce that reversed all of yesterday. So really wide range day for the Russell. This is an odd day. You look at something like this and go, all right, the markets were lower. No, that's a pretty rare event to see something like this in the Russell. It's getting extended as well. Remember we talked yesterday about where this weakness was coming from, growth stocks in the Russell. In other words, small cap growth stocks, right? Very extended here in the short term, and that is the weakness. You could use the IWO to take a look at that. That's the weakness being pulled out of the IWM. Lastly, we got the S&P 500 back to the 200-day moving average, working on it. Let's see where we stand here. If we're using, well, let's do it like this. Let's use the index. There you go. So from highs here, roughly, these are rough numbers here, roughly about 7% on the pullback so far, maybe just a touch more. So working on that 10% pullback, which we haven't seen in over 15, 16 months, something like that. A 10% pullback in the S&P, by the way, would put you, is it right at the 200? Nope, it's going to be just below. So you're going to be about 43.30, somewhere in there, which is almost these previous lows. So we'll just mark that real quick, say right in here is about your 10% pullback. That's what it's working on at the moment. So it's good sign for all the people out there that want that pullback. You got a little bit more to go. I really don't think it does it all in one move. So don't expect Friday, Monday, and so on to pull you back down there. Would be awesome as far as buying that pullback. That's what you'd want to see. I don't think that's the case. We'll see what happens. But in the S&P here today, you got the bank stocks doing pretty good because of earnings. Morgan Stanley reporting earnings, got a 4% gain on the day. Traveler doing the same exact thing there for you. Booking Holdings, 2.3% gain on the day. Match.com, maybe getting a little bounce there. I don't know. Pointed out the other ones, Marriott, EA Sports. Some healthcare stocks in there as well. Humana, but still pretty much a mess. Anything that had a good day today is a real tough one to get excited about. Even Union Pacific, rails are killing it. It's tough to get excited about these in this case because, for example, like look at Humana. All right, it's just been beaten down, showing relative strength today, but overall much weaker than the market. I don't know. I think you need more on something like that. But the good news is we'll be back, every day. The market's open, ready to go. Looking around at crude oil, that one finally starting to pull back maybe a little bit. You don't want to fight the uptrends in oil, but you got a new high that hit today and then it reversed as well, so not immune to the market's movements. You got bonds, yields moving lower, prices moving higher there, not too bad, and the volatility index committed to more of a consistent move higher. Also, gold just slightly lower. Not a big deal for gold, actually. It had a great day yesterday. It was above average move for gold. It's very normal for the next day to be very common or very quiet like that. So no problem there. And I wanted to check real quick on Brazil. Okay, so Brazil, look, this is just an interesting technical pattern. Very much a consistent downtrend that broke yesterday. So a lot of people looking at Brazil. It had a bad year. It was the worst market around the world. Bad year, starting to... What is that? Is that heat? It sounds like a heater. Anyways, broke the downtrend. Just wanted to point that out because Brazil, Chile, Peru, a lot of people are saying value is now not in the U.S. anymore. It's in other countries. So that whole value play where people are looking to buy something that's beaten down, that happened here in the States. Now it looks like money's moving outside the States to value countries, right? And so that's one way to take a look at that if you want. New trades, just short-term trades here today. I did one. I closed one and put a new one on. Take two. So take two, I sold a really wide strangle, 140, 200. It was a lot of money to do that, and the intent was not to sell so wide. The intent is I don't know that take two is going to settle in right here. And the goal would be that I think it's going to settle somewhere around 160 in the short term. So my idea was put a strangle on, make some money from the $200 call, then slide that sucker down once take two settles in there. I like the 140 for now because I'm going to have this through earnings, so I don't want any surprises. So we got the 140 put, 200 call with the intent of collecting something here from this $200 call, sliding down and maybe collecting and having a tighter spread with a greater total premium collected there. So just to give you an idea that it's not like, oh, that guy's scared that it's going to move a lot. No, I just didn't have a good idea that take two is going to stay right there. So I was just starting with something just to get my eyeballs on it. Etsy, that one closed out today. I had sold the 130 puts, closed it out for 51% of the total premium, and that is the end of that one. I'll close that off, and I might point out that Cody's Planet Fitness there. By the way, I don't know if you had a chance, Cody's been kind of busy today, but that one held up the best out of everything.
I looked.
You looked? Okay,
Yeah.
So he's keeping an eye on that one. And to give you guys an idea, the way we're doing this here is we're all going to have trades inside of one account. We're going to start real small, but we're going to show everything. In the research site, we have a special area, and we're actually going to say, hey, we're putting on a trade, putting on a trade. Everybody will keep you updated on their trades there, and we're just going to show you, for better or worse, the point being that there'll be lessons that you've never been taught before. And I'm not just saying that to get you to go check it out. The way we go about it will be in a way that is not just like, stock pickers. No. There's extra layers to that, and I plan on finding clever ways to explain the extra layers that no retail trader has, in my opinion, or at least I've never seen, try to explain. Because just guessing if a stock is going to go higher or lower, you're in for a rough life. That's a tough one to do. I've tried it. All right, new highs and lows for the day. And then we'll do the stocks in the news, and I'll take your questions. If you have any questions there, I'm sure you're going to have some questions today. New highs, 12 new highs today. The new highs consisted of consumer staples, financials, and energy. Basically what we've seen this whole time here. I already pointed out Mondelez. That one hit new highs and stayed positive for the day, but this is a consumer staple stock that has otherwise been performing really well. Looking over at maybe some others, you got Pepsi, did hit new highs. Look, you can see clear uptrend, money clearly wanting to go to safety in terms of those types of stocks. ExxonMobil in the energy space had a great run here. This company is massively changing the way they do things. And so that's one from the energy space. Financials, you got the CME group breaking out of a little range there. Travelers Insurance is another one I already mentioned. And new lows, CarMax, I'll point out CarMax, their inventory is rapidly increasing. It's good news if you're trying to buy a used car, and you hope it stays that way. But CarMax's inventory, it's not just like all of a sudden people are slowing their purchase of cars. It's as if they stopped, right? You drive by any CarMax and look at how many cars they have. There's no blank spots anymore. They're filled up. So they maybe over-purchased cars there, or the demand is slowing down. We will find out when they report their earnings. All right, stocks in the news largely are going to be earnings related these days because that's what we're doing. Earnings for United Airlines, better than expected on earnings, revenues better than expected. However, they gave guidance to say that we think we're going to see overall capacity less than 2019, which is not a good sign there. They said the Omicron variant has delayed some of their increase in capacity there. Passengers not traveling as much as they had expected. Still strong, just not as much as they expected. They expect that their capacity will be lower by 16% compared to 2019. That's a big number. They're going to get hit on the day, and they did. I believe that did not help some of the other airlines as well. American Airlines, just one that I was thinking of there. Amazon, they said, new lows here for Amazon, so really getting weaker by the day. They are going to open up a store called Amazon Style. Put a lot of thought into that name, but Amazon Style, and it will be a physical store for fashion and fashion accessories. So I don't know where that store was going to be, but every time Amazon says they're going to do something, by the way, I don't see it. I mean, they must be doing this in like New York, Miami, LA or something, because it's not happening here. Anyways, Discover Financial, weaker than expected earnings there. Revenue came in weaker than expected, and just a slight down day, actually. Financials haven't had the greatest of runs so far this earnings season. It hasn't been bad, it just hasn't been stellar. And I mentioned that yesterday, so we won't ramble on about that here today. Speaking of American Airlines their earnings came out as well, and they were fine. They just lowered guidance going forward, so that was the other reason we're pointing out American Airlines. And lastly, Peloton crushed. CNBC crushed them today. 24% to the downside. That's like $2 billion of money that they're not worth. But Peloton says, or CNBC says that Peloton has halted production of some of their bikes due to lowered demand. $24 is basically where this stock opened when it first listed. It's down 90% or something off of highs. So it gives you an idea, right? What I really want to point out here is that this is one of the signs of a market top. And this is not speculation or anything. You see this, and if you go back to the dot-com days, you'll see the same thing. The world was presented with stories over the last couple years. Stories of disruption, stories of companies that were going to do things better, cheaper, all that stuff. Maybe something cool like a Peloton. It's no doubt that's a cool bike. But this story is not playing out. And I say it's a story because you were asked to invest in Peloton even though they have yet to make any money and still don't make any money. But if they could just do things right, this could change the world, right? It could be a great investment worth a lot of money. And so there was that pop on that news, but now we're finding that the story is not playing out like we were told. And that's not just for Peloton. I wrote down a bunch of them here. You got Beyond Meats. Nothing wrong with what they're doing, just their story is not playing out, right, the way that we'd hope for. Airbnb, A-B-N-B, B. There you go. The story's not playing out. They're losing money. It's not working. Lyft, the story still isn't playing out for Lyft. Look what's happening to that stock. The story stocks are not playing out. 23andMe. Supposed to be a great story there. They're not worth what they're currently worth. They weren't worth what they were in the first place. Nikola, well, we were lied to with Nikola. I mean, that was unfortunately, the guy just flat out made up stuff. But Nikola, the story's not working out. Maybe it does, but right now it's not working out. Another one's NIO, right? The story of these massively and quickly growing companies that were going to make a ton of money just aren't there. Plug Power, what are they waiting for? That's a little different space, but speaking of space, Virgin Atlantic, right? I could just think of these, or Virgin Galactic. These stories aren't playing out, and that happens in major market tops. .com is a great one. The real estate's another one. You can see it. I'm not saying that we're headed for crashes and collapse and doomsday and all that, but that's the first part of what you start to see. And all of a sudden, people don't want to pay top dollar for a company that doesn't make any money, barely has any sales, and really has a long runway to profitability. So that's my rant on that one. I didn't mean to go off on a tangent there. Going on to tomorrow, we've got very light earnings because it is a Friday. Schlumberger, Huntington Bank, and Ally is it, actually, for tomorrow. And not really good stats to give you on any of those. So I'll take your questions here, see what we can do, and then get ready for our class here tonight. You like the pullback in the market here? The story, like inflation, is transitory, right? Yeah, I had to walk that one back as well. I don't think inflation stays here, though. I think it will settle in, especially with the Fed. If they do hike by 0.5 point, they'll be back in control in the short term. But we'll see what happens there. Yeah, I've yet to try a Beyond Meat one, too. The only time I was traveling somewhere and I saw it on the menu and I would say, oh, I'll give it a shot. And they didn't have any. But now, Mr. Andrews got a point, right? Lyft, Airbnb, Virgin Galactic, NIO even. These stocks can play out in the long run, right? I hope Airbnb does well. I like it. It's kind of a cool thing. But the value at which they came to market and which they stayed at the market for like the first year or 6 months, it's just not, it's not a value that you can assign to a stock unless the story plays out exactly like it. Robert Herjavec said it perfectly, right? The value of a company is fine. You can justify whatever you want as long as there's operational excellence. If one little thing goes wrong, you're all of a sudden worth this and this and this. Valuation is just way too high for a lot of this. But we will see. Rivian still going? Yeah, you got out too early on your short there. I don't know. So this is not one that I look at a lot, if any, because it's too new. But same concept here, right? There's good things happening at Rivian, but are good things happening that make it worth $150? That was fine when, oh man, Amazon's got their back. All this stuff is good. Oh, wait a minute. Amazon's going to go over here too? They don't all of a sudden have 100% in Rivian? Oh no. Ford selling out their position? Wait a minute. Holy cow. What's happening? There you go. I don't think it's the start of a market crash in the traditional sense there. Pullback is welcome. We're still very much in the middle of a recovery, a great bull market that can very likely continue. Money is easy to come by. Growth is still available. But in the ultra short term, a lot of these stocks just can't justify that price now that the curtain's coming back a little bit on the total story. Yep. Dustin, since you mentioned about companies not making a profit or stories, I want to get your thoughts on SoFi. Yeah, SoFi is going to play out. I actually like, about a year ago when they said, you know what, we're going to do whatever we have to do to be 100% in every person's wallet, somehow or one way or another. And That's aggressive. That's going to take a lot of money, a lot of time, but it'll play out. I think they'll do just fine there. I think there's an attraction to them versus Bank of America or the traditional Chase or whatever it is, but by the consumer. Yep. Where does one find a research site? How to? I'm not sure. Not sure what you're saying there. Yeah. We had a little bounce in the morning and a complete and utter reversal in the afternoon. Yep. Big time. And that's kind of the moral of today's story is what happened in the morning and then erased and went negative. Okay, it's not abnormal, but to the degree that it did it, that is abnormal. Very abnormal. Is there an analysis you can prepare to see how markets perform historically in the 12 months after the first rate hike? Yeah, I did that to some degree. I showed rate hikes 1, 2, and 3. We could update that though. Yeah. Yeah. You like your Roku cheaper? I agree. The cheaper Roku gets, the better it looks to people who may be interested in buying Roku. That's why that's my focus, or that's why I like that one. What do you think of semiconductors? Yeah, I'm not sure how to answer that question. They are pulling back. We've been talking about them for the last couple days. You're getting a lot of them to be oversold now, so expect people to come in and try to guess the bottom there. Yep. Bull markets are hard to kill. Very well said. Wait for the Fed meeting next week before you sell off. Yeah, there's probably be a lot of intraday volatility in the meantime, just because we're so oversold. But you're not going to get any guidance from the Fed because they don't, you notice how they're not talking, you're not on TV, they're not giving press conferences or anything. That's normal. They call it lockout or something. Before the meeting, they all go quiet. They don't give meetings. Blackout, that's what it's called. What FANG do you think is a better bet for the bigger bounce back? It's a good question. Well, I think the favorite FANG at the moment would still be Apple. You don't see Apple just falling apart. Amazon would be a little attractive just because of how extended it is to the downside. But then again, you got Netflix after hours, now at 409. I mean, that would be, what, 4.5 standard deviations away from any short-term moving average? That doesn't do that. Stocks in general don't do that for very long. Yep. With the meeting next week, retirements getting affected. We'll see. Plantair, what about it? What about it? You guys own that or something? There's a lot of people that ask questions about that one. So you got new lows and you have no significant attempt at a slowdown in the downtrend. So I don't have a great answer to say, yeah, give it 3 days, it'll bounce. There's nothing there that says this, like Peloton. There's nothing there that said there's a bottom, take a shot, you know. Yeah. Oh yeah. Well, I rambled a little bit today, but it's fun. I get excited when the markets fall. How do you not get excited? You know. I'll hope it continues. By the way, it's just like I was saying earlier. I would not expect it to continue over the next series of days. You expect there to be some recoveries in there, maybe a small day that's green and positive, and people go, I don't know, is that the bottom? Maybe it's it. So you expect these little fits and starts as you go, kind of pull back. But we're still cheering for that 10% plus pullback, and it's in the works. I'm happy to see that. And we'll be back to conquer the world from there and see how things go. I appreciate you guys watching, and we'll see you later if you're in our class, Wine and Wealth, over in the classroom this week. And we'll hang out, do some geeking out, talk about all kinds of good stuff. Enjoy.